Our guest says in 2025, the forest products industry was left for dead. Trump increased tariffs on Canadian exports. It was pretty moribund recovery for U.S. housing. However, he says 2026 could be the reset year. We're joined by Daryl Swetlishoff, Senior Managing Director and Head of Equity Research at Raymond James. Daryl, great to see you, and thanks for joining us.
You bet, Andy.
You're essentially calling the bottom in forest products here. You say that, sure, challenges persist in U.S. housing, but the stocks, you say, are unequivocally cheap. And politically, there are signs that President Trump might seek to rejuvenate the housing market in the U.S. as we near those midterm elections.
Well, exactly, Andy. If you look at this sector, we're suffering 15 quarters in a row of a downturn. The stocks have been cheap. They've gotten cheaper. Cheap isn't good enough for us, though. Really, what we saw is three catalysts, which led us to upgrade the names right now. Technicals, supply, and demand factors, as you point out as well.
One problem for the Canadian industry has been massive expansion in output in the U.S. South, those pine plantations in places like Georgia. But you think we're not in for more meaningful growth in that part of the world right now?
So supply is one of the key factors here, Andy. In Canada, you mentioned the tariffs. The cost structure has gone up a lot. We've seen over the last 2 years about 3.5 billion board feet come out of Canada. That's it's about 7% of the North American market not flowing south right now to the U.S. We think that's a big factor in balancing the market. On the other side, the factor that you mentioned, there has been an expansion in the U.S. South. However, with the increase in costs, you've seen the steel implications on some of the tariffs as well, and reduced profitability, and also pulp mills shutting in the South. We don't see the U.S. as being able to meet their own lumber demand. Even with all the wood they have down in the South.
You did a couple of rating changes. You moved West Fraser Timber, the industry giant, up to outperform, buy from a hold. What was your thinking there on WFG?
So when we look at the stocks, we were marketing in Toronto this week. We had our U.S. housing analyst, a very good analyst named Buck Horn, and we had Toll Brothers. So we got some insight into the demand side of the equation in the U.S. What we see happening, Raymond James' view is that single-family housing starts are going to be a little bit stubborn to come back, but repair and renovation from existing home sales could be the place to be. That would tend to favor lumber over structural panels like OSB. So our top picks right now are Canfor and Interfor, raised both to strong buy. West Fraser is the bellwether. It's the most largest liquid name. They do have a meaningful lumber exposure, but they also make some OSB. So they'd be one peg lower than Canfor and Interfor.
And then, you may have referred to this, Canfor and Interfor, you're even keener. You've gone to a strong buy from a buy.
Yeah, again, we see in terms of demand, first we saw the supply coming out, so we have less lumber available, and some of the optionality in demand. We are heading into the midterms in November. There's a sense that the U.S. administration would like to get housing going. Mm-hmm. You've seen some of the work done on buying MBS securities. There's $200 billion allocated towards that. Mm-hmm. Could we see more, I guess you'd call it QE in housing? Could that get the long end of the rate curve down and stimulate housing? That could very well happen. So, mm-hmm. We do see some potential for increased housing activity as we move into the second half of 2026.
Just remind me, the U.S., of course, they have that odd housing market where people take out mortgages for decades, and it can make it sticky then. It's unattractive to sell your house because you'd have to pay much more if you got a new mortgage. Have they made any progress on that?
Well, that's an excellent point, Andy. And I think that's why the existing home sale numbers have been right back to great financial crisis levels. Lumber, about 40% of lumber demand is repair and reno. There has been a backlog of necessary repairs. And as that used housing market frees up, we think there's going to be a lot more repair and reno. And that's one of the reasons we're more bullish on lumber than structural panels going forward.
Tell us about BC, though, just finally, before we let you go, Daryl. A lot of damage done over the past few years, a lot of mills shut down. Are they coming back?
You know, Andy, if you look at the mountain pine beetle effects that we saw, I mean, that was unavoidable, and we had a large curtailments in British Columbia. You know, since then we've had increased costs, lack of fiber availability, a lot of this self-inflicted through provincial and federal government policy. But, you know, costs are still way out of line. So we're going to have to see some progress on getting some of that fiber available and reducing cash costs before we see BC Mills really investment come back to that province.
Daryl, thank you very much indeed. I think you're visiting from BC right now, and you've been given some pretty formidable central Canada weather. Thank you very much indeed for joining us. Daryl Swetlishoff, Senior Managing Director, Head of Equity Research at Raymond James.